China's economy has continued with strong growth in the first part of 2011, but the coming months are going to be critical as inflation is expected to peak and global uncertainties, including the Middle East unrest and the Japanese earthquake, present new challenges. The spring season is going to be critical because inflation is expected to peak in April. Officially, that'll be something like 6% on the CPI, but we know from consistent reports on the ground that the inflation is felt to be much higher, possibly as high as 15%, and food inflation definitely is higher. That's one of the biggest areas, of course, because it has the most impact on people's lives. But fuel prices are also rising after an official price hike in February, and the fact that international fuel prices are rising adds further pressure on that. So the government is concerned on the policy front, where it's really expanded all of its tools to boost supply, to prevent shortages, to control prices, and also to try to prevent speculation and punish those who are engaged in hoarding, which are often state-owned companies. As the government does those techniques, it's also tightening its security control over the society in ways that are very intense and suggestive of fears that are much deeper in the government than perhaps we even know. That doesn't necessarily relate to the recent spate of Jasmine protests, although that can't be dismissed. Instead, what it has to do with is the overall economic strains that are pressing the Chinese society at a time when it's trying to transition its economic model, and this inflation problem has emerged. So inflation's going to be peaking and the government's going to be on heightened alert, even as the economic restructuring that's affecting the entirety of Chinese society is at a crucial point and really intensifying in kind of the challenges there. What that has to do with is shifting the society in a way that you can have more internally driven, household consumption-driven growth. And the problems have kind of mounted up on the Chinese. First of all, if you look at the real estate sector, China's attempting to constrain growth in housing because that's what people have resorted to in order to store their wealth, and it's pushed housing prices up really dramatically, especially with the expansion of credit over the past few years. What that means is that regulations to put downward pressure on housing prices are going to have an effect on the construction sector and possibly even slow things down a bit, which of course for China is very risky, running the risk perhaps of creating an uncontrollable slowdown. This process is playing out, and we can expect that even as the real estate sector slows a little bit because of government regulation, there's going to be this new burst of fiscal spending related to the restructuring plan, the five-year plan covering 2011 to 2015. And that should sustain the kind of strong growth that we're familiar with seeing out of China, even at the expense of future problems when it's clear that pushing credit into the society and using fiscal spending to drive growth don't always end up with the results you want. And you still are stuck with an export sector that can't continue to grow at the rates that have been known in the past, and consumption that's much more depressed than in any comparable country. So with China continuing to use fiscal spending and credit policies to drive growth, despite its claims of moderating that growth pace, what we're going to see is its appetite for resources continued to surge. And that's happening at a time when global commodity prices have once again surged up, being reminiscent of levels in 2008. When we look at the Mideast unrest spreading and the impact on oil prices, and also the Japanese earthquake having its own effects, what they're left with is the idea that even as they're trying to import more, things are becoming more expensive. So Chinese imports are booming, and that's happening as costs are surging and this prospect of trade deficits continuing. China had a trade deficit in February, which was the biggest since 2004, and it's possible that they'll have a trade deficit again in March. Now, these are seasonal trends. Typically, China does have trade deficits at the beginning of the year. But if they continue because of the high prices of imports in this attempt to import more, then you're going to end up in an area where you could put some of the aspects of the financial system at risk for lack of liquidity.